Travillian Next is a division of Travillian, a financial services specialist search and talent advisory firm. Since inception, the Travillian team has dedicated itself to enhancing the return on investment of a company's most important resource, its people.
Welcome to Travillian Next Live, everyone. I'm very excited to have you join us for another dynamic and informative discussion. I'm Brian Love, head of Banking and Fintech at Travillian. And if you don't know, Travillian is a boutique executive recruitment firm founded in 1998, serving the financial services space. My division covers community banks and credit unions all over the country. We take pride in helping our clients recruit game-changing talents through a collaborative, strategic process. While our focus is C-suite, we also assist in the hiring of unique skill sets, whether they be in finance, risk, operations, credit, and innovation. We also have found a terrific niche helping the most tech-forward banks in the country find the leadership they need to sustain their growth and their strategies. Please visit TravillianGroup.com to learn about our firm and our practice. And also, please visit and subscribe to our content channel at TravillianNext.com if you haven't done so. Ton of content on that website, similar to today's webinar. So for our discussion today, titled Mission Partnerships, Alignment of Talent, Culture, and Tech Allow Banks to Do the Impossible, we'll dive into how institutions can best align themselves through thoughtful strategic partnerships. To chat about this and much more, we're welcoming some of the most forward-thinking, innovative minds in the banking industry. And first up is our good friend and co-founder of True Digital, Patrick Sells. Patrick, how you doing?
Hey guys, Brian, Keith, great to be on with you. Doing great.
Patrick was previously Chief Innovation Officer at NYDIG and Quantic Bank in New York City. Also, we were just talking about this, Patrick appeared on our very first webinar titled Solving the Digital Riddle back in July 2020 during COVID. So this is a sort of homecoming. That same year in 2020, he was named American Banker's Digital Banker of the Year. So welcome back for that fourth appearance here today, Patrick.
These guys, I guess one of the perks of switching jobs every couple of years.
The next three panelists all hail from different sized banks, 75 billion, 20 billion, and 1 billion. So we'll get a chance to hear very varied insights from up and down the food chain, so to speak. First up is Kari Rappe, Chief Information Officer, Project Manager at Prevail Bank, a billion-dollar bank based in Medford, Wisconsin. And with a deep career focus on IT, Kari has many years of experience within community banking and has been with Prevail since 2016. How are you, Kari?
Good, thank you. Thanks for having me.
You bet. Next is Danielle Doyle, Chief Innovation Officer at Atlantic Union Bank, which is 20 billion in assets, based in Richmond, Virginia. Danielle also served as VP Enterprise Payment Strategy at Bank of America, and prior to that, at Ally Financial in their business operations and strategic planning division, focusing on deposits and consumer strategy. Also a huge Star Wars fan, just like myself. Welcome, Danielle.
Thank you. Glad to be here.
And lastly, Matthew Smith, Chief Digital Banking Officer, Head of Enterprise Product Marketing and Transformation at Webster Bank, a $75 billion bank in Connecticut. Webster and Matthew's previous bank, Sterling Bank, had a notable merger of equals that was completed last year. At Sterling, he was the head of direct banking and banking as a service. Welcome, Matthew.
Thank you very much. Nice to see you all.
To get it started, I'll throw it over to my colleague, co-host Keith Daly, who is the principal of Banking and Fintech here at Travillian. Keith, take it away.
Thanks, Brian. Great intro. Appreciate it. Great to see everybody on here and to our audience. Welcome. Danielle, I'll start with you. As Brian mentioned, you came from larger institutions and went downstream to Atlantic Union Bank. Can you tell us kind of why you did that and, some specific ventures you're working on now that are innovative at smaller banks?
Yeah, absolutely. I had a great experience with Bank of America. I was at a very exciting time, especially in payments, with the emergence of RTP and peer-to-peer really taking off. It was just a fantastic time to be kind of thinking of, what 5, 7, 10 years of the future of payments look like in the US. So coming from that experience, I made a really purposeful decision to move to a mid-sized bank. I genuinely believe that mid-sized banks are, they're the backbone of America. My parents are small business owners, so I lived that experience of, the community bank really being a pillar of the community. So I think that providing a huge value to society, it's always awesome to work somewhere and bring your talents to a place that you think is, valuing and bringing value to their clients. As well as I think that overall, as the mid-sized bank ecosystem really is really in a position that they have access to technology and solutions that they didn't, 5, 10 years ago. So I think it's a sector of the market that's really prime for innovation and change. And I'm really excited to be in a position where I can start actualizing that change and you're really bringing value to our clients.
No, that's great. And over to you, Matt. Same question for you. I know you started out at GE Capital, moved over to Sterling, which was acquired by Webster. Can you tell me kind of how the culture's changed as you moved to a smaller bank like Sterling, and now working for the combined $75 billion Webster Bank? What kind of initiatives you're working on now?
Yeah, so I think, what I enjoyed very much about making that transition to Sterling was the entrepreneurial spirit. It was very much a culture that was driven by trial and error, and we were given the flexibility to be able to launch multiple businesses. Right during my time at Sterling, was able to launch their first direct-to-consumer deposit bank, which was the second time I had the benefit of being able to do that. That bank's called Prevail Direct. And then launched the banking as a service business as well, which was very successful leading up into the merger. So I think, that kind of smaller institution where we can get together, make quick decisions, launch quick, potentially fail quick, succeed quick, right? All those things I think, really intrigued me and helped me, find success in that place. I think coming into the new Webster, right, which is the combined merger of equals, there's still a lot of that entrepreneurial spirit. I think we're right now going through a core conversion. Actually, it's coming up this coming weekend, right? So we've been working really hard on that, and I think now is the time where we're starting to have those, kind of what a post-conversion life look like, and what do we want to focus on. Look, I think ultimately a lot of what we do and what my team does is focus on deposit gathering, right? That's a really large part of the equation here, right? We are primarily a commercial bank focused primarily on commercial lending, and we have a very diversified deposit gathering strategy with multiple businesses, including HSA, banking as a service, digital bank, consumer, right? And then even, treasury management, commercial strategy. So we've got a lot of levers, right? And I think the big thing for us now is, continuing to figure out how we can make improvements in each of those levers, and then expand to other areas where we think we can get meaningful deposits at a low acquisition cost.
That's great, Matt, and good luck with that conversion this weekend. I know that can be a heavy haul. Over to you, Kari. Being at a $1 billion bank, and Brian and I have a lot of clients that are billion, even below. You can wear a lot of hats, many, many, many hats. Can you tell us about your career background and what you've been working on at the bank?
So I worked in banking very early in my career. And at that point in time, I'm not sure I ever had an aspiration to come back. But what I do value in a job is something bigger than that particular job, right? Somebody involved in the community, making difference in the community. And I think when you work in a small bank in a very small community, that's a big deal. They're a pillar in the community. And so that was the kind of the draw for me to come back to my hometown, which is, again, a town of, very small population, and try to make a difference. And I'm hopefully doing that through my position. As far as, what our bank initiatives are, we're spending a lot of time probably in the realms that a lot of other people are right now relative to data and analytics, trying to really figure out who our customers are, and making very strategic decisions surrounding, working towards improving those customer relationships. The other side of that is really the digital experience. We're focused, like I think almost everyone else is right now, on improving that digital experience. Relative to data, I think we're looking, we're focused on CRM, middleware, all of the pieces of the puzzle with relative to a data warehouse analytics. So I guess that's kind of where we're at. That's a little slice in my life.
Yeah, well, that's we all have the same mission. I think everybody on this panel to really help community banks and help our community. And that brings me over to our friend Patrick Sells. So before I ask the question to Patrick, I just want to talk about, I went out and I bought golf clubs, Patrick, for the first time in 10 years. No clue what to look for. I was Google searching. So many different offers, so many different kind of brands. I went to Golf Galaxy and they went through the gamut for my game and everything. And I feel like, can you give me an overview of True Digital? Because a lot of times there's so much information out there. There's so many fintech partners. Can you just give me a quick overview of your new company, why you felt compelled to really start this company, and what the mission is?
Sure. I got into the industry, 6 years or so ago at Quantic, and that was my first time working at a bank, and admittedly, honestly, did not really even understand how banks worked. I think probably many Americans, I'm not sure, have a checking account. I just thought all my money stayed at the bank. I didn't realize they actually lent it out to someone else. And kind of going through that process, fell in love with banking and the industry, heard stories from everyone else about their communities and the importance of the role that banks play. I saw that, experienced it, absolutely loved it, and was tasked with leading the digital transformation of Quantic, which proved way harder than I would have guessed, again, coming from the outside. And then getting to go to a vendor, NYDIG, and talk to nearly 1,000 banks and credit unions. I think what really reinforced for me was a lot of those challenges we had at Quantic felt unique to us because I didn't have any other context, but then realized, no, wait a minute, it doesn't really matter the size or the brand. Every bank, there's struggles when it comes to vendors and technology in ways, and it doesn't need to be that way. Or what if it couldn't be that, if it wasn't that way? And that really was the genesis of True Digital, was this idea of whatever your digital strategy is for you, great, but we want to just try to make it easier. And key to that was recognizing that, well, each bank is different. There's many parts about a bank that are the same, and bankers all live, to Kari's comments, through similar things. And so you have an industry where people, we may compete at some level, but we more really understand each other, and we don't really compete. And so could we harness the information and knowledge of the industry in a way that was powerful for the outcomes of being able to find and navigate the world of vendors, not just fintechs, but all vendors. And I've been blown away by the hundreds and thousands of vendors that banks use for all kinds of things that you don't really think about. We think of cores and fintechs, and at the same time, knowing that many banks would help someone else if I knew you needed help. And this was a big part of NYDIG, was, okay, well, you're on this core and you have this middleware. Well, I know this bank who also has that, and you guys could talk. And okay, I think people would do that much more if we simply knew how to find each other. And so, think of True Digital around optimizing relationships with vendors, but it's really about harnessing the collective of this industry to discover, improve, and work better with all the vendors that a bank needs.
Yeah, Patrick, great response. In your relatively short period within the banking industry, you've had such a diverse background, being at a vendor yourself. And I was a community banker too, and now I'm at a vendor as well at Travillian, and it's great experience. So following up on this vendor piece, I wanted to bring Matt into this. You're at a $75 billion bank. What are some of the roles vendors and vendor optimization play in your digital journey at Webster and at Sterling before it?
Yeah, well, I would say in both scenarios, quite large, right? We've adopted a strategy that is very much a partnership strategy, right? So even in our client-facing technology, we do very little development work in-house. So pretty much everything that we offer through digital touch points, whether that be for colleague or client experience, is all through third-party applications, and is supported primarily through third-party relationships, right? So having a very strong third-party risk management program in place, right, is very important for us as an institution to find success in that model. I also think making sure that there's a strong understanding and synergy between the technology groups and the groups that are in like my digital team as an example, or in our product teams that I also have responsibility for, I think is really important in a recipe for success, right? What we've essentially decided to do is just resolve ourselves to the fact that we're not a technology company, and that the best way that we can compete in this space in a low cost delivery model is for us to find the best strategic partnerships possible. So I would say, not just from a governance once they're onboarded, but even as a selection process, we're constantly looking at what's new and innovative in space, and trying to set up an infrastructure for us to be able to essentially toggle in and out new solutions without having to do major amounts of lift or giant kind of conversion type activities for us to be able to do that. So that's essentially how we've set ourselves up, and that is going to be the go forward model post the conversion activities that we have coming up.
Thanks, Matt. And you mentioned in that response, third-party risk management, which is like, ding, ding, ding. That's, a lot on a lot of our clients' minds. And we'll get to risk management in the next section here. But Kari, I wanted to ask you the same question I asked Matt, because again, you're well downstream, and I'd love to just understand how crucial are the partnerships with your vendors, and what are some of the keys to Prevail's success?
Vendor partnerships for me are critical. I don't have internal expertise, staffing, budget, quite frankly, to develop applications internally, nor quite frankly, do I want to be involved in the regulatory side of that game. So I don't think my experience is much different from Matthew's, interestingly enough, except for they probably are a bit more critical because I literally have no internal expertise. So I'm looking for vendors that are essentially an extension of my staff. I'm looking for partners. If that particular application isn't successful, the bank isn't successful. That's, at the end of the day. So I'm looking for someone, with the same common goals, growth initiatives that we have at our institution. Again, they literally are in many cases just an extension of my staff.
To piggyback on that a little bit, I think going through this process at True Digital and really being immersed in the world of vendors, changed kind of the starting point by which I look at a bank, if you will. And it's overly simplistic, but a bank in many cases is a collection of customers in a community and a collection of vendors. The bank itself is really just connecting all of those things together, as well as to the monetary system, and understanding it in that way. I think for me, it helped really shine the light on the importance of vendors and those relationships and really owning them, because they are, to your point, Kari, an extension of the staff in many cases. And it really is, in some ways of saying it, the business of a bank is putting vendors together to serve your customers in the community. And I don't know, Matthew, one of the questions as you were talking, it came to mind was just how that process has gone as you merged the two banks and the vendor, like the tensions, what was easy. I'd just be curious, how that process has gone for you guys.
Yeah, I think I think at first it's a bit of a challenge, right? Because you have some underlying conflicts in methodology, right? So there was a point in time where we were going down the path of, hey, should we be owning code? Should we be owning, our client-facing technology to give us more scalability? I think we quickly pivoted from that strategy once we figured out, the cost that's associated with it, and the ongoing, kind of like governance, as Kari said, as well as the expense of running that on a go forward basis. So I think, it just became basically a exercise in reconciling where we've got duplicates, right? So, if we've got two vendors that are providing the same, kind of function, it's basically a decision at that point, which is a combination of who's traditionally been a little bit easier to work with, who's built the scale, right, for an organization our size, and then who's going to easily integrate into our other platforms, right, that we have that ultimately will serve as the chassis for us to be able to operationalize these things. I think we've gotten to a really good point, actually, since you brought that up. Like at this point, I think we've identified, at least for the first round of things, where we're at, and we've kind of, exited away from some relationships and kind of beefed up some of the others. But as I said, I think this is one of these things that's like a continuous improvement model, right? And so as things change, specifically in the world of like money movement and payments and, consumer functionality, right, and things of that nature that we know as part of a deposit gathering strategy, we've got to have the ability to quickly flex to, potentially new vendors or more innovative vendors to be able to deliver quicker and better solutions for our clients.
Yeah, I appreciate that, Matt. And obviously, vendor vetting is something, maybe we can talk about as well. But, hearing about legacy woes, a lot of banks are hampered by, pre-existing vendor relationships. And that can sometimes be tricky to navigate if you're jumping into a new one. So Danielle, I wanted to go to you, also at a nice mid-sized bank. How do you deal with vendors who are less responsive or don't deliver what they promise? I mean, it may have been the same when the bank was 5 billion. Now it's 25 billion and they can't deliver or they're not easy to work with. Is it easy to pivot? And how do you set the table for this in the beginning of a vendor relationship?
Yeah, I mean, that's a fantastic question. I think it's something that, regardless of size, every organization is going to have issues with at some point or another. Just nature of the beast. I mean, at the end of the day, it really boils down to the relationship you have with the vendor. Making sure that you did the groundwork at the beginning of the relationship. So setting clear expectations, creating clear mechanisms for clear back and forth communication, and keeping those lines open. I think that it's very easy for us to you have a team in place and a special project to onboard a new vendor service product. Everyone's really focused on it for a while. It goes live, and then you do a quarterly KPI meetup, and then maybe not the next quarter, and then it's Christmas, and then a year goes by, and you don't understand why this product is terribly underperforming. And it's because sometimes those relationships take a little bit of a backseat as we go forward to the next new and shiny. So at the end of the day, it really is just making sure that you have a team who's in place to manage those relationships and keep those conversations going into perpetuity. It's not something that ends.
And a little bit on something Danielle just talked about, and Matthew, it's also been kind of fascinating from the world of vendors and taking me back to Quantic. I remember being in moments where, okay, hey, we wanted this thing. And so given the need we had, the vendors that were out there, who was compatible with us, that guided our decision. But that happens over and over and over and over again as the needs of the bank change, vendors evolve and change the products that they offer. And so what you have now is all of these vendors and different products being used, but all of those vendors also have other products. And as your needs evolved and they evolved, trying to manage all of that, it's an overwhelming task in one sense. It's like, a giant jigsaw puzzle, but a great way to drive cost out today, but also really set the bank up for tomorrow is to simplify that vendor, stack you have, because we all know how hard compatibility is. And so how do we, as an industry, begin to say, okay, where can I do that rejiggering, to have deeper, bigger relationships and simplification? It's not easy to do, but it's just something that, I've been thinking a lot about these last couple of weeks. I don't know if any of you guys have gone through an exercise where you've tried to consolidate vendors like that. I'd be curious how that went and if you were successful in doing so.
So I think the only thing, it's almost like a watch out for with that approach, right, that I would say is I've found that you could overcorrect in that, and then there's way too much reliance on a single vendor. So like I don't want to make it like a bashing session for whoever, right? But we've got one strategic partnership where we've basically adopted their entire stack, right? And there's pros and cons to that. You get bundled pricing, you get, kind of like favorability in terms of like the ability to kind of get attention and work with them. But you're at the mercy of their ability to be able to execute, right? And so I think there's definitely a happy medium with what you said, which is like, hey, getting as much as you can out of a single relationship, I think makes the most sense, both from an economic standpoint as well as from an operational management standpoint, but not to the extent where you completely give up your ability to be able to, innovate and grow in a better way, right? So we've kind of forced more discussions with that particular vendor to say, how can we partner differently, right? Like how can we get more access to like, API layers and be able to plug in things independently. And, we don't want to own the client experience, but we want to influence it, right? And we want to have more say in those things. So I think what you're saying is correct. Just be careful not to overdo it, right? In specific areas.
Yeah, I completely agree with that, Matt. One thing I get entirely fearful of having, a single point of failure in any aspect of the business. I think on top of that too, as kind of not just the mid-sized bank industry has kind of grown into digital and maturing into technology, I do think that a lot of the vendors who service us have been growing and maturing along with us. And I think that it's getting to be a little bit better understood in the industry that this is a two-way street. It's very difficult depending where you are in production or in your software development life cycle. It's difficult to pivot and change to a different vendor, but it's not impossible, right? It needs to be a two-way street. And I think that a lot of the vendors who are up and coming and the ones who are growing and scaling in the market are doing a lot better job of understanding that.
I'll just piggyback on that a little bit. I'm in complete agreement with Matthew and Danielle on this, but I'm spending a lot more time in the middleware layer, in the API layer, so that I can pick the best in class, so that I don't have to put all of my eggs in the core basket or whichever basket. I think typically we're talking about cores in this realm, but.
Yes, bankers, safety and soundness, concentration risks. We don't want that.
Yeah. And Patrick, I just heard that word again, risk, compliance and risk. And major piece of the puzzle is the vendor partnerships and relationships. And another part of the puzzle is the relationship with the regulators. So many of our searches at Travillian over the past couple of years, too many to name, have been risk compliance, vendor management, third-party risk, and it's even getting tougher, especially post Silicon Valley and that fallout. How does this for you, Patrick? How does True Digital, really integrate that risk and compliance into your product when it comes to vendor management and working with different partners?
I think we're only beginning to unlock several different values, if you will, for banks when it comes to risk and compliance with vendors as the network continues to grow and the platform expands. I think one of the most simple ways, again, pulling on the experience of being both a vendor and a bank, when it comes to compliance and safety and soundness, it's about being able to understand what are the risks of this vendor, how have other banks who are similar to me, understood those, mitigated them, overcame them. But again, if I don't have the ability to really talk to my peers who have that same experience, I kind of have to do my best job in the dark trying to guess where that is. And a lot of times that can kill a relationship, or a relationship gets off to a bad start or puts the bank in a bad spot. And so simply by being able to find other bankers across the country who work in compliance or risk and have experience with the vendor, that it could be so helpful. We all know reference calls aren't the most efficient things usually because we spend the time trying to figure out, like, should I even be talking to you? But the value potential of them is huge if we could find the right people. Another way we help is working through providing information about vendors upfront. And so, think of like almost a lightweight due diligence questionnaire. Okay, do we know that you have a SOC 2? Do you touch PII? And being able to see that information. So whether banks are sharing that with other banks or vendors are, uploading that information. So, upfront, okay, hey, this isn't something I should do, or this is something that I can get comfortable with.
No, that's great. And going over to you, Danielle, how do you balance innovation with risk? And also, who's involved in that process? I'm assuming the chief risk officer or somebody from that department, but there can be pushback sometimes. Sometimes the chief risk officer is saying, whoa, 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 slow down there. How do you balance those two aspects of innovation and risk?
Yeah, absolutely. And, I think when we're talking about innovation and banking in general, I think a lot of everything we say is going to boil down to, it boils down to relationships and collaboration. I think, the balance between risk and innovation is really, just boils down to the ability to collaborate, amongst the different business units. I think that especially in a lot of the mid-sized market, innovation a lot of times sits outside of the lines of business, whether it sits in technology or kind of as a standalone thing. So it's an area of expertise of being able to bring in these vendors and make those relationships. But at the end of the day, lines of business, the business heads need to be responsible for their lines of business. So including appropriate business representatives, obviously risk compliance early and often, as well as technology and vendor management programs are far more important than they even over the last couple of years. The importance, and I don't remember 10 years ago seeing as many vendor management teams in a meeting as I do these days, which I love to see. I think that again is pressing on the importance of the relationship with the vendor ongoing. On top of that, I think that aside from very fortunate to have a risk and compliance team who is very forward thinking and very open to collaborating and ideating on maybe there's an issue here, but what can we do to get it to fulfill that and to fix it, and what can we do to find a workable, passable solution. We also take a lot of pride in our organizational relationship with our regulators. So making sure that we're having open early conversations about how and why we're doing things, I think is hugely valuable in an organization that wants to be on a little bit more forefront of innovation, not doing it in a vacuum. Following precedent set by other organizations, just again where those relationships between other teams that have been doing something similar is so important.
No, it's great, and I've learned so much just speaking with candidates over the last few years about how important the partnership is with the regulators. Mm-hmm. Communication every step of the way, because the last thing you want to do is have to launch a product and have a regulator shut that down. Kari, over to you. As a billion-dollar bank, how does risk and compliance really factor into your growth and innovation? It must be incredibly important just being a smaller bank.
I'm going to chuckle a little bit here because anyone who knows me knows that compliance is the least favorite part of my role. But we've been very strategic. We're still working towards this, but we've been very strategic in trying to balance the speed of implementation and moving forward with vendors to make that balance work for how quickly we need to bring something to market and making it safe and obviously passing all the regulatory check marks. So we're still working on that. It's definitely, we're not there. It's the quick to implement, quick to fail. I wouldn't say that we're great at that today. It is probably, to your point, Keith, bringing the compliance and risk in very early in the project. Oh, yeah. I think that is a big mistake we made several years ago. We would bring them in kind of once we had the vendor selected. Well, they have no background at that point, so I think it's important to bring them in right at the front end. So they're educated all the way through the process. They've seen all the same vendors that we've seen. And then just make sure we're balancing the speed of those implementations to take all of that into account.
That's great, Kari.
Reminds me of a story when I was at Quantic. Because one of the earlier vendor decisions we had made was to have online account opening, and not really knowing much about compliance. Just looked at and said, okay, what technology looks the best, or it seems like it would be the best, and found Mantle and really liked them. And remember going to our compliance team and saying, hey, look, we found this vendor, it's great, let's go. And was immediately shut down, and didn't understand why. And after a while of frustration, went and just sat down in the office with her for a couple hours. And what I realized was the vendors, well, they all did online account opening. They weren't the same in terms of how they did it affected different policies at different, if you will, from the vendor level. And that was a big unlock. Okay, I need to understand upfront what this vendor does and what policies of mine would be impacted to see how that fits inside of a risk management framework. And unfortunately, like that doesn't happen, naturally. Vendors don't really know always the policies or areas they could be impacted. But that, Kari, your point of being able to upfront understand what's going on so I can think about that in the context of the risk management framework we have is really the key, one of the keys, I think, for speed and innovation to avoid all the time to get nowhere.
And Patrick, actually, I wanted to kind of step in and ask this question because you just reminded me of it. Travillian deals with a lot of BaaS banks. It's a nice little niche that we've created. And, several BaaS banks kind of got stung a little bit in the risk category. They were almost like relying on their vendor to have those capabilities. I won't mention any names, but Matt, your bank, Sterling, got into BaaS. I'm sure that you were dependent on vendors for that strategy. Do you have any take on, how to better kind of vet that out and maybe include the bank into that early, like Kari mentioned? I'd love to hear your thoughts.
Yeah, I'm actually really proud of the program that we built out from a governance standpoint for banking as a service. And we've actually extended that to new product initiatives, essentially. I personally, when we first did it, I personally brought the OCC through it. It took us the better part of 18 months to put together. And so we put a lot of time and attention and partnered very closely with both legal and compliance to be able to do that. One of the things that I think that was hugely successful and something that I recommend, not just if you're looking to get into banking as a service, and I'll talk a little bit more detail about that and the complexity of that, but anything really is if you're a function that is fostering innovation or you're doing new product development, things of that nature, you should have a first line risk person, or even better if you get a couple people, right? I found tremendous value in that. It allows the product people to run a little bit faster when you have a person that's on their team that can kind of run through regulatory and compliance issues from a first line perspective. It also helps the more traditional compliance teams sit within that second line function to really help form their part of the relationship. So you're not slipping. There's no job slips in either directions. I think for banking as a service, the complexity there, to your point, is you cannot rely on these customers, right, from your perspective, to provide massive parts of your operations on your behalf, right? If you're leveraging out your charter, then that ultimately means that even though we might view a BaaS client as a client, the regulatory view of that is that they're a third-party vendor, right? And then their vendors then become, other vendors that are parts of the solution. So we've actually had to implement a very thorough process of not just vetting whatever technology they've built, but also whatever technology they're integrating from third parties for us to get comfortable that they have operational readiness and they're able to adopt our policies and procedures to execute. It is complex, right? And I think, to your point, a lot of smaller institutions didn't have the infrastructure in place or the means, right, from a scale perspective to be able to do that. And I think we found a lot of success in response to that because we had such a good program. A lot of more established fintechs have been coming to us and saying, hey, look, we'd like to partner with you because, we think we're ready for something that's a little bit more mature and has more of a consultative approach to it. So that's how we've found success in that space.
And I appreciate that, Matt. It's great to hear your perspective, having kind of built that years ago, and it's still thriving. I've heard a lot, the word culture has been kind of bandied about in today's conversation. I really want to talk about culture because you really can't sustain innovation without cultural buy-in, and that stems all the way to the top. So, Kari, I'm kind of curious. Again, I mean, we keep saying $1 billion bank, you're the small bank on the block, but I'm just curious, at a smaller bank, it seems like cultural alignment should be easier. There's less bodies, right? Less people in general. Is that true at Prevail and in your experience in banking?
it seems logical that that would be the case, but I do not think that is the case. I think when you have a small bank, you're automatically overcoming the stigma in the market in your community of being old, stagnant, unsophisticated. So sometimes you have staff that come in that have that same view, right? I mean, it's not always that we're hiring. You try to overcome that in the hiring process, but that's not always the case, right? So we're attempting to kind of overcome that in everything we do with vendors, with vendor selection, staff, new hires in the community. So banking has changed dramatically just in my 7 years of being here. I mean, we struggle to keep staff moving down the innovation path. We need to be on to grow and thrive. Again, if they came from if they live local, their view may have been that maybe they came here because they don't want change. They don't like change, and now we're trying to push them down this innovation path. And let's be honest, their jobs are changing dramatically. I mean, I'm sometimes asking them to do today, 2 years ago, what they were hired for doesn't exist anymore. So it's definitely a continual evolution of making sure we hire the right skill set for this ever-changing, market, and just making sure that we're keeping staff engaged. We have them bought in to our vision, right? Our vision of innovation.
Yeah, it's so clear the linkage between culture and talent. And, I can't wait to talk about talent. That'll be our last subject after this. But Patrick, I wanted to go to you because ever since we've known you, we've had numerous discussions with you about this subject. You've met with thousands of banks over the years with NYDIG and now True Digital. What traits or experience from the board or leadership do you see at highly successful, innovative banks and credit unions?
Yeah, it is a topic we've had many conversations on and text messages over. I think, if I try to summarize it, one is customer intimacy. I think it's easy to, as any business starts to build and grow, there's people and layers between me and the customer. I'm actually trying to solve their problem. And to the degree I really understand the businesses and the individuals that my bank serves and how their world's changed and how their world is changing, that I think makes a big difference because it creates the clarity then for the bank to understand why this is important. It's because we're trying to serve our customers because they are not staying static. Everyone around us is constantly evolving. So that attention to customer intimacy, I think the second one would be the understanding that you do need talent in every function. It's easy sometimes to think about that. I think in this industry, when you think about like vendor management and compliance, vendor management at one point was something that maybe there was only 2 or 3 vendors, right, that you really had to manage. And so it was more of making sure the contracts and everything was set up in a certain way. But as the number of vendors exploded, okay, that gets a different discipline and attention there to really make sure we're doing that well. And it can't just be, oh yeah, that's a function, but how is that team constantly growing? And do I have people in compliance and risk management who've already played at a level up so that as the bank needs go, we go with them. And so kind of that understanding of investing in functions of the bank that aren't profit centers differently is really key. And then I would say lastly is just the clarity. A lot of time you put 100 banks' core values up on a wall and mission statements. It'd be hard to know that it wasn't just the same. A lot of synonyms, a lot of the same words showing up, and any organization, a bank or not, that has clarity around who we are and how that is distinct from someone else, and how within we behave. And so that creates alignment across the board around for employees. So it's that clarity of who we are. It's the intimacy of the communities that I serve. And it's understanding that every role, every function needs to be invested in, would be the 3 traits that stand out to me the most.
Yeah, it's a great response. And yeah, I'm just kind of thinking through conversations I have with banks, and sometimes they think a little bit more with their pocketbook over anything. So yeah, I really appreciate that. Very, very good perspective. So Matt and Danielle, I want to go to you on our another question about culture. How do your banks identify emerging technologies and trends in our space? And then how do you incorporate them into your actual strategies? We'll go to Danielle first, maybe, and then Matt.
Well, I think that's honestly probably the question I get the most. When I'm out and talking about, what is innovation? What does it mean to mid-sized bank? First thing that comes out of people's mouth is, how do you identify these trends? How does that work? And I always have the same response. It's very much an art. It's a two-way street, coming out to the marketplace and seeing what's out there and, determining what's best in practice and bringing it back, as well as listening to your team. Even kind of just minor griping about this one thing may not be working as efficiently as it could be. So thinking of finding all those problems and seeing where we can find solutions for those things. I would say it's a lot of continuous education. And I would say that it's not just at the executive level. I think that a lot of organizations can kind of fall into a trap where you're sending, your CEO or CIO or whoever is kind of the talking head to these conferences, rather than using these as educational opportunities to bring in the staff so that they are immersed in, making relationships with other organizations and meeting with fintechs and all those opportunities. And I think that one thing that, mid-sized banks are getting a lot better at is really just taking advantage of all the opportunities we have out there. Between banking coalitions like Mid-Sized Bank Coalition, other conferences, and just general continuing education like Banker School, those types of things. Just really exposing a broad swatch of your team from the top all the way down to the broader ecosystem. I think that's the best way to find out what's out there and what we can do to solve the needs for our client base.
Daniel, you remind me of just a quick comment of one of my favorite lines I took away from my time at Nidec Stonebridge. Was the founder Ross Stevens talked about how business is a learning competition, and we therefore must be able to learn faster and more than our competitors. And understanding that is true for everyone in the organization, not just a few people, is critical to growth.
I completely agree with that. I love that sentiment. And I think a part of it too is really listening to our teams. So creating an environment where anyone at any level of the organization feels empowered to bring up an idea. That maybe they saw something, they read something, they were at some conference at just because they're in risk or compliance or whatever, they still have every right to bring a technology solution, just an idea up. So making sure there's a culture where people feel empowered to say, hey, I have an idea, and also a place where there's not ramifications for those ideas. A place where everyone has the ability to be heard.
I've been very deliberate about hiring staff from other industries also. I think it's important for us to acknowledge that sometimes other industries do it better than we do, and that they bring something to the table. I know that's a bit controversial, you want to hire someone who has a background, but sometimes those have been the most successful hires for me.
I mean, we see in the news every day, the big banks will go to the press with, they hired someone from Disney, they hired someone from Amazon, just to have those, iterative digital experiences. So there's no reason why we shouldn't be taking advantage of that in our organizations as well.
Matt,
Hey, Brad.
Yeah, go ahead.
I'll jump in with a couple points. So I try and take this as both a strategic and tactical discussion, right? So when we're kind of sitting around and we're talking about here, what are some things that we want to get into? My immediate mind goes to, are we addressing a need that we have either operationally or to expand into a new market or something to that extent? Or are we keeping a pulse on a thing that we think is going to be essentially a market disruptor, right? So like I could use blockchain as an example. I don't think we spent the better part of a year just trying to find a use case for blockchain. And so I think finally we just stood up and said, like, why are we forcing this, right? Like, it's fine to kind of keep a pulse on what's going on in the market. And as, payment systems advance and, there's new ways of doing things and networks get replaced and, all sorts of innovative things around like payments in general. I think as long as we've got a pulse on it, we don't have to be a market leader in it, right? We can sit and have a fast follow approach, and we should have a group of people that are consistently looking at what's new and innovative in the market, helping us, kind of take form and shape of things that we know you can't turn on a dime, right? I always say this thing where it's like it's turning a boat and not a car, right? Some of these things like real-time payments as an example, which has now become much more prominent in our space. That's conversations we had 4 years ago, right? And you needed that much time to be able to get into position to be able to do it. So I think there's got to be, a strategy kind of component to it where you're keeping a pulse on what's new and innovative from that standpoint. But I also think there's things where it's just like, hey, this is things that we do that we could just do better, right? To everyone's point, whether that be hiring in folks that help bring a refresh set of eyes or different culture to the mix, or just examining the way that you do things and trying to figure out what's the best way that you can implement new solutions. I get calls all the time from friends at other banks. I get calls from people in the company where they say, exactly what Danielle was saying, hey, I saw this thing, it looked pretty cool. Maybe you might want to check it out. People tend to come to me a lot with like alternate use cases for things. So they're like, hey, I found this thing. I don't know if this fits as designed, but it might be useful for something else. And then I can sit, because I have such a broader view of the organization, try and figure out where we could potentially plug it. So I think there's got to be a strategic and tactical approach. And that's kind of how we set up our team to be able to do that, constantly innovating on things that we currently do today or expansion in markets. And then thinking about things that, ultimately we know are coming down the pike. And putting substance to that and projects around that to be able to catch those things when they become hugely relevant. So that way we don't, fall into a situation where we're just not competitive anymore.
No, that's great, Matt. And the correlation between culture and talent is always there. But I was just rewatching The Last Dance, the Michael Jordan Bulls documentary that came out during COVID. And I was thinking, look, you could have the greatest culture in the world, but if you don't have Jordan and Pippen, you're not going to win. And they had the same culture that next year after Jordan and Pippen retired. Terrible team. So you need to bring in the right talent, the best talent. And Matt, at Webster, how does your bank kind of prioritize acquiring that talent? And then after that, fostering innovation and challenging those types to grow with the bank?
So I think it starts with identifying what's the objective, right? And so when you have a very clear objective, you're able to kind of build a team, and you can isolate things into skills and abilities, right? So I'm a big skills and abilities, kind of person. And what I try and do is when I'm looking at either positions that we have, I'm trying to understand whether or not it requires something of a technical skill, right, that needs to be acquired through, some kind of onboarding of someone that has that either background or, an educational component to that. But I also look at abilities, right? And then I go, to your point, you got to be able to navigate this place. You have to be able to thrive in this culture. You have to be able to do these things. And sometimes the abilities to me are even more important than the skills, right? If I can get a person that I know are capable and I've seen them and their skills or abilities on display in other places, that could translate a lot easier versus like, hey, I'm just trying to go out and get one person that has direct experience in ABC, whatever that particular subject is. So I try and be a little bit more thoughtful about the role, and to the extent that I can bring in, sort of diverse talent in terms of experiences and thinking, we tend to have a lot of success when we do that versus if we're just very focused on the skills component of things.
Yeah, and Kari, I'm going to go to you next. You had mentioned diverse skill sets, and you've been very deliberate about that. I love what Matt said about skills and abilities, but for Kari, I wanted to mention, or wanted to ask, you're in a more remote destination. Matt's in New England. Danielle, you're in kind of the greater DC market. Kari, unfortunately, you're closer to what, Eau Claire or, Green Bay, but you're like right in the middle of northern Wisconsin. So, what strategies or programs does your bank have in place to attract and retain that top talent with these innovative skills and abilities?
That's definitely a struggle. I do take the same approach as Matt, though, where I will hire for attitude, aptitude, work ethic much more than I will hire for skill. I figure I can train someone for what I need them to have for skill. We as an institution did make a strategic decision where we will allow staff to work from home. So we are hiring out of market area, which isn't common kind of in our small bank space. But if we, for example, I have an ISO that is completely out of market, sits, I think, probably about an hour and a half from our nearest branch. It was a very perfect hire for us, and we will do the same with kind of any of these strategic positions that we have. We have to, in order to be competitive. It's tough to hire, especially technology, innovation type of positions in these rural markets. So I guess, yes, I take the approach of sort of like a sports team, right? I'm building a team. So I'm looking for someone who is strong where I'm weak, or vice versa. So I take very much that approach to hiring. And it works for me, I guess. And again, kind of the attitude, and I'll train them up. And I hire a lot of young, right out of school staff that come with really good attitudes. And it's worked for me so far.
Yeah, it's the biggest arm wrestling match we have with our clients is sometimes around, they have to be at the HQ. So it's nice to hear that you've adopted that strategy. Actually, I wanted to go to Danielle, and then Keith has a question for Patrick. Just Danielle, on this hiring strategy question, I wanted to hear your take. I know, again, you're in a different part of the country. Has Atlantic Union embraced work from home? What is the culture around that?
Yeah, so AB has taken a bit of a hybrid approach. So I'd like to have folks in the office, 2-3 days a week, with anchor days to kind of foster some of the ability to collaborate in person. Again, Richmond is a bit of an interesting market. It is not a huge town, but are very fortunate in that there are few very good universities near here. We have a really robust internship program. They do some fantastic work. And we're also very fortunate to have a few other financial institutions in town. So for it being a smaller market, and being an organization that does value the in-person time, pretty fortunate as far as our marketplace for hiring talent.
That's great. And Patrick, since we've known you, you've hired for Quantic, you've hired for 9Dig, and now you're hiring for True Digital, and we've helped you on some of those searches. But really interested, what attributes are you looking at when you're hiring somebody for your team, especially coming from a non-banking background, so you have a different perspective. What are some of the attributes and skill sets that you look for in your talent hiring?
You guys have been so helpful as a partner, across the various companies. I think this for me, one of the things really focus on is how do you articulate core values in a way that are distinct and they act as both a magnet to people, but also an immunity system from those who aren't like you, or don't share those same, values. And so our first core value is begin again. The idea that let's make a decision, and it's okay if we have to make another decision, and almost by design, what happens if you do rearrange those Lego pieces? Because all we really want to do is to find the absolute best answer. And the second one is about win. It doesn't matter whose idea it was or who gets the credit. We're one team, and either we won or not. And so using those ideas to communicate, hey, does this resonate with you or not? And what you find is pretty quickly people go, maybe, I had the right skill set and you had the right job, but that's not the kind of group I want to be in because I feel uncomfortable there or I'm not happy with that. And so, whereas others almost kind of raise their hand and say, hey, I think I'm like you and I want to come, I want to learn more. And so that's really been the key for us. We've got 15 people and increasingly just very, very convicted of communicate who you are as a group that makes you unique and distinct and let that pull in people and be that immunity system to push them out. And, most everyone I think at True Digital, I've either worked with or they work at a partner of someone I worked with. And so tapping that network of people you already know has been very helpful.
And to ride off of that, we're going to kind of go to our last question here, which, Patrick, you mentioned unique skill sets, unique backgrounds. It's super important at Travillian, to incorporate diversity and inclusion into our searches for our clients. And because of that, you do get different perspectives and thought processes and, and backgrounds. So this question is for everyone. I'll go to Matt first. What role does D&I play in fostering innovation within your bank, and then also in your hiring process?
I mean, it's huge, right? I don't necessarily think that I walk into a situation and I'm, actively targeting like a person from a specific cultural background, right? But I think that I find a lot of value in diverse thoughts, and that usually comes from people from different backgrounds, right? And so for me, I think one of the things that I've been very focused on, especially being a person of color in a space that, in most places you don't find a lot of folks either from African ancestry or from Hispanic ancestry. I try and see, are there opportunities for us to create inroads, whether that be through promotion opportunities or through recruiting in more diverse pipelines, right? Like for us to be able to kind of fulfill those goals. It is a thing that we take pretty seriously at the organization level. I myself am executive chair of one of our BRGs, right? And so we try and use that as a forum to be able to attract and retain talent as well. But I think it's hugely important, and it's a thing that ultimately, thrives our success on a go forward basis, because you don't want, I think I forgot who exactly said this on the call a second ago, but you don't want people that think exactly like you, right? That's usually a recipe for a disaster. What you want is people who bring different objectives and different perspectives for you to be able to complement yourself and the others on your team. And I think, that's a thing that we have found a lot of success through multiple avenues of partnership to be able to do that. So it's very important.
Danielle or Patrick, do you want to go next?
I'm not sure what too much I could add. I think you summed that up beautifully. I think end to end, it's making sure that we're not, in an echo chamber. Whether from, being not curating our pipeline, from the college recruitment process or at every step thereafter. So beautifully said, Matt.
Yeah, would agree with that. I think, one of the things to think about is innovation usually comes from disparate mindsets who approach something with a different set of assumptions as a starting point. It's really hard to be innovative if we all think that everything's got to be this way because that's all it's ever been. And so when it comes to diversity, it's incredibly important, from race, background, socioeconomic, gender, all of those things, because that's how you can create the disparate mindsets to make sure that to enable the innovation and the identifying those types of opportunities to think differently about something.
Well, yeah, incredibly well said. And at this point, we're past our 1 hour mark, so we're gonna end things. But just wanted to really, thank everyone who was both watching our webinar and, of course, our panelists, Kari, Matt, Danielle, Patrick. Thank you all so much. Keith, thank you so much as well for co-hosting with me. Also wanted to thank Avery at True Digital and Autumn Herring, who's the Wizard of Oz here at Travillian, who put this all together. So thanks so much for everyone being here today. This video will be available at TravillianNext.com in the coming days, and we hope you watch it and share it. And again, thanks so much, everyone.
Thank you.